times, I mean, there are different ways to tokenize things. And so some of that will be, you compare it to, say, a mutual fund or an ETF. So the ETF is still a security, even though it has securities also in it. It's a basket of securities. So that's the similar thing with a tokenized asset. And but we need to make sure that the rules that apply for disclosure and issuance and all that can accommodate, the special features of tokenization. And it's much more efficient, perhaps, to have a tokenized security than some other sorts of things. But we need to make sure that we have a level playing field, that people are certain how to go forward. So that's going to be unfolding as we address these issues.
And how do you ensure that investors are going to get the best price if stocks are trading on the blockchain?
Well, I think the markets will accommodate that. I mean, obviously, with actively traded things, you have very straightforward, you have the opportunity for current valuation that's, again, because of the way the blockchain works, I mean, that's a transparent aspect. So as the current financial system then adapts to accommodate these new forms of securities, I think there will be, just like we have now, national best bid and offer prices and all of that. I think that we will make sure that new forms of securities will mesh in with the rules, and that the rules will accommodate that sort of trading and that openness and the publicity of the prices.
You're calling for on-chain markets. What exactly are you calling for there? Do you want all securities to be tokenized?
Perhaps. I mean, when you look at the whole arc of history, in the 1960s, things were still in paper form, paper securities, and there was so much trading in this big bull market at the end of the 1960s that the New York Stock Exchange and other exchanges had to close for one day a week just to catch up on the paperwork, and because the data processing couldn't accommodate things. And so, and then sometimes 2 days a week because the volume was so heavy. And it's not that they had quill pens to write in the ledger to, show the transfer of stocks, but, they had to build the systems to accommodate all that. The SEC at the time helped the industry through helping them change the rules so that they could immobilize securities, have book entry. The Depository Trust and Trading Corporation came about, which is a cooperative of securities firms to try to do that book entry transfer of stocks. So that was a huge watershed. So I think we are perhaps at the similar point now, where who knows how this technology will develop. I certainly don't have a crystal ball. 5 years from now, it could be completely different. So we want to be in a good place. We're accommodating that. We're not an impediment to innovation.
Under the last administration, the Howey test was used to administer whether a crypto asset was a security or not. And it was deemed that most crypto assets were considered securities. I know you are of the opposite school of thought, that many crypto assets are not considered securities. Is the Howey test germane in your view at this point? Is it applicable, or is the SEC looking at creating a brand new yardstick to create a clearer definition for what defines a security or not?
Well, great question. The Howey test is named after a Supreme Court case back 80 years ago. It had to do with orange groves and oranges. So that's completely different than tokenized securities or tokenized assets. And so what we have to do is, it was a Supreme Court ruling, so that's the law of the land. It interpreted the term investment contract, which is in the securities laws, but Congress in those laws didn't define that. So thus, the Supreme Court took a stab at it that worked for that one particular case and has been applied, for years after. So now we're now in the 21st century, and dealing with digital assets. So the SEC has authority to interpret that term, and so we are going to set out to have rules that comply with the law and obviously build upon that, and to help people understand how that applies to the current situation.
You said in a speech yesterday that in the coming months, the SEC will consider using authorities to make sure that any archaic laws that are squelching innovation and entrepreneurship are revoked. What could we see stripped away?
Well, that's a good question. I don't want to prejudge anything, so we're going to have to do this in a very straightforward and diligent manner, obviously. But there are a lot of things that apply to, say, operating companies like a steel company or something like that that's manufacturing steel that doesn't apply to maybe a digital-oriented company. And so, as far as the products go and whether or not those particular products themselves need to be registered as securities or not. So again, so we need to make sure that the forms that people need to fill out in order to declare and publicize to the SEC and to the public what their product is, what it's supposed to do, what the innovation is, or what the purpose is, so that our rules can accommodate those particular aspects of these new products.
Switching gears a bit, investors who are eagerly anticipating the proposed Truth Social Bitcoin ETF are going to have to wait because the SEC has apparently postponed a decision on that until September 18th. Could you tell us why the delay? Are there any concerns there, or what's going on?
No, it's part of the normal process of deliberation internally. So it's an active matter, so I can't really comment on it. But just to caution people that just because there is a temporary pause in that, that doesn't mean that it's not going to be deemed effective ultimately. So anyway, so this is a normal process. You look at the other products that come. So there's we're going to get through that, and